Who's the senior equity advisor at UBP now. I mean, Vey-Sern, when you just thought it couldn't get any worse with a 9-year low for those new home prices, we've come in down 5% year on year, another down 0.7% month on month. I think as an equity advisor, my question to you is, I mean, how are you advising some of your clients with regards to whether there can be a rally without an improvement in the property sector?
I think the short answer to that is that it's going to be very difficult for there to be a sustained rally as long as the macro economic outlook continues to be weak. You can see, for example, from Tencent's results last night, that even though the game segment did very well, the other segments like online advertising, fintech, payments company actually saw a significant slowdown in growth, and they are talking about how the weak macro conditions are a drag on that, and the ADRs actually fell 3% last night in US trading after a fairly solid set of numbers. So I think the macro backdrop is very important for stocks, even if we are talking about good quality stocks delivering strong numbers. It's hard to see a sustained rally until the broader outlook can be resolved.
Yeah, how troubling is that? I mean, you mentioned Tencent. This is a big company. Its games, its products, its services are ubiquitous in China. This is a company that is known by global investors as well. But it too is facing, as you say, these macro headwinds. How challenging is this when you've got Chinese stocks at 6-month lows?
Extremely challenging is the short answer, and you can argue that Tencent is a proxy or even a benchmark stock for China, and it's something which most global investors would look at getting exposure to if they want exposure to China, and half of its revenues are under pressure, right? And already it's more of a defensive company because half of its revenues are in games, but when we look at companies that are going to report tonight, companies like Alibaba, companies like JD, almost all of their revenues are exposed to consumption. And I would expect a significantly weaker set of results and growth from those companies compared to Tencent.
Right. What are you expecting from the data trio that we're going to get in about 20 minutes' time? Not as far as the headline numbers are concerned, but what are you looking for in the supply versus demand side that could move the needle as far as investors are concerned?
I think at this point, the expectation for macro numbers is probably very low. Given some of the high-frequency indicators that we've been watching, it's most likely that we will see a weak set of numbers. But I would be surprised if these numbers actually move the markets on their own, because, like I said, expectations are very low and a lot of it is priced in. If you look at the stocks and the valuations of the market, it is at already probably a decade low in terms of valuation. So we are at a point where I would argue that weak numbers may not provide a lot of downside for stocks, but less than weak numbers, if that makes sense, would actually provide upside, I think.